JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today we... okay, so just bear with me one moment. Today we have the Friday, 28th of January. Welcome everyone. Welcome to this Friday's morning session. As always, before we jump into the charts, as always, quick read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest, and we can continue. Okay, so now then guys, before jumping into the charts, quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So check us out here on jfdbank.com, and click on the research tab right there on the top. So now then, jumping into the charts guys, the first one I want to pick up here is Nikkei 225, looking at this picture here, you can see that we had a nice little rebound, which is quite good, which is quite expected given the fact that we have distanced ourselves from this downside line here, taken from the high of the 5th of January. So everything's kind of in line. After we have tested this 26,057 territory, roughly around here, this is what I talked about yesterday, that we might see maybe a bit of a retracement here given the sharp decline, and well, this is what we got. So although we had this we have seen this trading activity today in the positive territory, we still ended up kind of being in negative territory for the whole week. And if I look at the weekly chart, we can see that clearly. So we kind of it's not really looking positive here. The only little positive thing that can maybe some buyers could pick up is the fact that the index on a weekly chart here ended up being just bang on this 100-day EMA if we look at our weekly chart here. So that kind of gives a bit of hope here for a few more buyers. Maybe we could see a bit of a rebound here, a push back to the upside, back to this downside line. However, let's not get ahead of ourselves. Let's go slowly, step by step on this one. And initially I'm going to be aiming for the lowest point of August here, near the 26,955 level. But if that gets cleared, yes, we could go for a little bit, a few higher levels right here. So again, quite an important obstacle here will be this one. Let me just quickly highlight that on our for our future reference. Then we will keep an eye on it, and if we do hold here, another decline could be possible. So something like this could be possible for right now, or if, let's say, we clear that and we stay above it, then maybe we'll go for a slightly larger correction to the upside. Shanghai Composite, guys, there we go. So drifted heavily to the downside, and for the week, well, I mean, it's it closed kind of below this 100-day EMA. So the I would say the Chinese index is not really looking good here so far. We do have some support levels. We do have the this lowest point of July near the 3,312 territory, approximately around there, or we do have this 200-day EMA, and I'm currently looking at the weekly chart. So be very careful here. I mean, this area could be quite an interesting one to watch. So let me just also mark one of the levels here, then, just in case. So So this whole area, it will be something of an interest for us, because in a way, if you look at the bigger picture, we might be seeing here something of a very wide range here. So something like this, guys. I mean, let me just actually clearly mark that on the chart here. So yeah, let's see if this is actually going to be the case or not. For now, maybe. I'm not saying that this is for sure, but if we look at this bigger picture, maybe we will be seeing here a nice little range. Well, actually, I can't say probably a little bit, because it's quite a huge one. I would say it has been running from around the beginning of February of last year. So basically for 1 year, the index kind of was moving sideways and in between these two areas. From the shorter term perspective, if we took a look at the daily chart, we'll see that we are trading below this downside line taken from the high of the 4th of January. However, in a similar fashion, we have moved a lot away from this downside line. So maybe a bit of a retracement here could be possible, especially if we climb back above this 3,395 territory right here, which is marked by the low of the 20th of August. If we do that, then, well, I'll consider a bit of a larger retracement here to the upside. Now, jumping into NASDAQ 100, guys. Here we have an index which is trading below this lowest point of October, and yesterday, if you can see here, we have kind of tried to climb back above this hurdle, and it failed to do so. And well, I mean, that's what the result we got. Technology sector was one of the, I think, the third from the bottom, kind of. So the third worst performing sector in the U.S. In the first place was consumer cyclicals, and then real estate, and then after that it was technology. So we saw NASDAQ dropping heavily. However, what's interesting that NASDAQ was the biggest loser, and maybe just because the fact that it's so exposed to technology and technological stocks, so all of them kind of drove the index lower, because Dow and S&P, they were up I think it was. Let me just double check very quickly. I think it was, so Dow almost kind of left unchanged, fractionally in the red, just like 0.02% loss, and S&P was around 0.5% loss. So that's why, like I said, NASDAQ kind of heavily sold off. However, looking at this picture, I said before that I'm going to keep an eye on these two areas. So for the area kind of slightly below that psychological 14,000 mark, and yesterday, as you can see, we kind of ended the trading session just fractionally above the 14,000 mark. And if we take a look at the cash index right now, we'll see that the index is trying to fight back, or should I say the bulls are trying to fight back and trying to push the index back higher. This area seems to be quite an important one to watch for now. Of course, we'll see. Maybe everything can change. In general, everything can change very quickly. So far, this area, I'm going to keep an eye on it. And at the moment, the cash index is trading at around 14,150 levels. So we're already having that nice little retracement here back up. However, I would still stick to this area right here, this 14,385 zone, just to be a little bit more on the safe side in order to go for a larger correction here to the upside. So if we do push above it, yes, I'll consider maybe a larger correction higher. However, if we do continue to stay below this area right here, this 14,385 zone, there is still good hope for the sellers. I mean, we could see more of them joining in, especially if we also drop below this highlighted territory right here. So this is something that I'm keeping an eye on. Of course, some of you probably short-term traders do like, probably myself as well, we do like to get maybe into these little rebounds and try to capture that little retracement. The only thing is that I would say it's Friday, guys, and if we have seen already such a strong move to the downside this week, I mean, we might see a continuation move as well. So it's a bit of a tricky one. And remember, as I always kind of try to mention this, that Fridays are well, my favorite word, tricky. But yeah, they can be one-way direction, and so it's sometimes difficult to maybe capture those rebounds because it can just, you know, fall, or just rise, and rise. So be very careful with that. And like I said, for now, I'm leaning more towards the downside overall. But I would prefer to maybe see this clearance here, a drop below that 14,000 level again, and then yes, I'll keep an eye on these levels, especially on the 13,843, 44 zone right here, and then we would take it from there. For now, that's unfortunately the game plan. As long as it stays in here, I'm gonna just observe the price action. I'm just gonna monitor this, yeah, just like that. So let's keep an eye on it, and let's see how this is going to play out. Now, German index, DAX. So, yep, we had a beautiful rebound yesterday. We pushed higher, and, well, if we take a look at the cash index right now, it is a bit of a mess. I mean, we are drifting a little bit lower right now, so it's currently sitting at around 15,429 zone. So, yep, slightly below yesterday's close, but above the 38.2% retracement on the Fibonacci that I have drawn here. I'm still keeping this Fibonacci just for today. I'm going to remove it next week, but just to want to see if these levels continue somehow to kind of play out, because as you can see here, on Wednesday, for example, it traded perfectly in between the 23.6 and the 38.2% here. If we're seeing right now a little corrective move lower, that's fine. I'm keeping an eye on this 15,463 territory. If it holds somehow, we might see a continuation. We could see a rebound and then a continuation move here. This continuation correction to the upside. So keep that in mind, guys, and let's see if that's going to work out or not. If it starts falling back below the 200-day EMA, I'm gonna take a bit of a neutral stand here, or actually maybe even more of a bearish one, because the reason why I'm saying neutral, because I mean, I would like to see maybe this one falling a little bit lower, but yeah, we could already maybe start looking at the downside. The only thing is that what I'm always afraid is when the instrument starts oscillating around one of its EMAs, and yeah, then a lot of traders get caught out. So that's the reason why I'm kind of a little bit, you know, skeptical. So long story short, guys, for now, yes, I'm keeping an eye on this 15,463 territory, which is the 38.2% retracement here on my chart. Maybe in your chart is a little bit different, but roughly around here, I would say. So if it stays somewhere around here, then yeah, I'll aim for this downside line. Now jumping into the dollar index. So boom, there we go. Safe haven mode is on, and we have a liftoff. So we broke the highlighted territory. I spoke about it yesterday. Initially I said that I'm targeting that because initially we were sitting around here, 96.67. And yep, looking at this right now, I mean, everything's kind of, yeah, working out nicely according to the plan. So my target was this 96.94 zone. We've managed to reach that, and we managed to overcome it as well. Now, if we look at the bigger picture, my next good potential target is around the 97.80 level, which I'm going to be targeting if the index remains above, well, not only this upside line, but above this hurdle right here, this 96.94. If it stays above that, then yes, I'll continue aiming higher. If it doesn't, if it falls back below it, well, maybe we could go for that corrective move again to the downside. I need to get rid of this downside line, no longer needed. So yep, keeping an eye on certain levels instead. Gold, so yep, beautiful, beautiful move here to the downside, and everything's according to the rules, to the idea that I've mentioned in the beginning of this week, guys. I said to keep your eyes on this upside line and the short-term upside line taken from the low the 10th of January, and also keep your eyes on the on the this area right here, this area in between the 1829 and 1831 levels. And if we get break below that, then yes, we could see maybe a bit of a larger correction to the downside. Initially, I'm going to be targeting this hurdle, this 1805, and this is what I said to you yesterday, that if it holds, we might see maybe a rebound here, maybe a potential head and shoulders pattern as well. But I said that also that, however, if we break that, then maybe scrap the whole kind of head and shoulders pattern for now. Instead, keep your eyes on this upside line, which so far is acting as a fantastic area of support, and that upside line is taken from the low, the 30th of September. Yeah, if it continues to provide support, then certainly yes, we could see maybe a bit of a rebound. I'll remove this arrow in general. I will remove the arrows for now. Or actually, no, I'm going to leave this one, because what I'm going to do here is, if it climbs back above this 1805 territory, this could be a good signal. Maybe we could go for a bit of a kind of a move higher here, maybe back to this highlighted territory in between the 1829 and 1831 levels. But if the DXY, and this is where you need to keep an eye on DXY, if the DXY continues to rally, guys, then, well, I mean, we could see gold actually falling apart here and well, drifting below this upside line. And this is where I'm gonna go back to the initial idea, which I've mentioned before, that on the broader picture here, we might see a nice little nice, not a very little triangle, but quite a big one, which has been in play from around the beginning of April of 2021. So yeah, and then yeah, of course, initially aiming for that 1778 zone, and then so on and so on. But we'll pick up on that if we get finally a break of this, and we see the commodity staying below this upside line. Good morning to everybody in the chat room. Sorry I missed everybody. So Evu, Erica, yep, good morning to all of you. And of course everybody else who's joining in, good morning. I hope you're having a wonderful start of Friday, guys. So yeah, let's jump into oil actually very quickly on this one. And this is, if you remember, if you were watching my videos from the beginning of this week, what I was saying, that basically I'm keeping an eye on this area right here. I'm not really doing much, because for me, this whole area in between these two lines is kind of going to be a little bit on the neutral side, because we could see kind of moving this the commodity moving sideways here. And for example, if DXY starts rallying heavily, then strongly, then we could see a reversal here. And basically, I mean, this is just kind of proving my point here, that we need to wait. And another thing to kind of mention, that let's say if it does right now, let's say drift lower, but then rebounds from this this downside line taken from the high of the 25th of October, if it rebounds from here and then moves higher again, maybe, just maybe, we could be seeing a beginning of a broadening triangle pattern here. So yeah. If that's the case, if it is going to be a broadening triangle pattern, the prevailing trend was to the upside before it enters that pattern. So in a way, according to the textbooks, yep, the likelihood of this one breaking to the upside would be quite high. However, we need to get that breakout first, because again, it could easily, you know, drift lower. Because, for example, if this is going to end up just mainly being the rising channel pattern. Now, this is what I've mentioned to you previously as well, when I was trying to make your lives a little bit more difficult on this one. So yeah, basically, if this is going to end up being a nice rising channel pattern here, then yes, of course, maybe even the broadening triangle here could just lead to a breakout to the downside, and we could see a move lower. So basically, with oil, it's not really that kind of really not that kind of easy right now, because again, there's a lot of temptation here, even from the bulls and the bear side. So be very careful. We rather go slowly on this one, and we rather wait for that perfect opportunity to step in, and then we could do something. Now, look, we will still of course continue monitoring this area right here, the upper side of the potential kind of this rising channel, and we'll keep an eye on this 87.90 level right here, which I've mentioned before. That's the high of the 19th of January, although we have created a new high for January yesterday. Still, I'm keeping an eye on it because keeping an eye on this high, because the high of the 19th of January, just because we kind of get these overshoots, but we don't really get the candle staying above it. So in order to get a little bit more comfortable, yes, we would like to see a nice good strong push above this barrier. So keep that in mind for now. Let's see if that's going to play out. If it starts falling lower here, yeah, I mean, we could consider maybe the downside. We could start considering the downside if it starts dropping somewhere below that 85 territory right here, approximately around here. Bitcoin now, kind of trying to climb back up. Perfect in general. Some of the levels that I've put here worked out perfectly. So for example, this one right here, the 32,850 level, we approached that area very closely, and we didn't really hit exactly that level, but we came very close, so that's fine. We're kind of looking at areas, not specifically exactly, you know, certain levels here. I mean, we normally kind of, when I'm mentioning a level, guys, and sometimes just kind of keep plus minus a few points here and there, just because, well, it's never exactly the exact number. But anyway, we had a nice rebound from this hurdle here. We pushed higher, but as you can see, for kind of the whole week, we were trying to push back above this 37,318 level. But yeah, it kind of continues to hold. We kept on getting these kind of false breakouts. But yeah, if we do eventually get that break and we do stay above this hurdle, yes, I'll go for a possible test of this downside line, which if breaks, then yes, could open the door towards some higher levels. But at the moment, guys, it's yeah, a little bit still the bears could easily jump in here, because as long as this hurdle, this 37,318 continues to hold as it is doing right now, then well, we could see another decline. AUDUSD jumping into a few pairs, guys. So of course, the whole weakness in the market, in the equity world, is not really helping here AUD, and the fact that US dollar is getting on the stronger side. So yeah, it's also it's a bad combination here for this pair, for the bulls of this pair, and yep, we're seeing now a drift lower. My next target is the lowest point of December near the 0.6993 zone. I'm aiming for that area approximately around here. If we clear that and we stay below it, then well, further declines are possible, and well, this would confirm a forthcoming lower low, and we would have to start looking at some other levels, guys. But yeah, we'll go slowly on that one, and we do have a bunch of areas to consider, but we need that confirmation break here. Initially, I'm just aiming for this lowest point of December, and then we'll go from there. AUD CAD, quick update on this one. Boom, there we go. Yesterday I talked about this hurdle right here, this 0.8972. We managed to clear that, and we managed to stay below that, and we are now kind of drifting further south. So that means that it increases the chances for it to see a further decline. And another thing here as well, also keep your eyes on that oil, because if oil rises here, then yes, I mean, AUD CAD with a weaker market, with the weaker equity market and the rising oil, this pair could continue sliding, guys, so be very careful on that. For the upside, I would need to take a very conservative approach here and wait maybe for a push above the 0.9072. I might revise this level maybe to somewhere here, because it's kind of acting, yeah, there we go. So actually this could be a little bit better level, so 0.9056 approximately around here, and yeah, if we do climb back above it, then I'll go for a larger correction to the upside. USDJPY, very quickly on this, boom, there we go. We had a nice, now this is where I have to admit something. Initially what I was hoping for maybe to see that retracement at some point. I mean, the nice recovery here, but I was kind of hoping to see it a little bit lower, so have to admit that this did not really work out according to the plan. However, the rule that I always mention and I always say to you guys, keep your eyes on the let's say on a downside line. If that gets on a downside or an upside line, if that gets broken, then this might open the door towards some, you know, the kind of the opposite direction. So here we had a nice good move initially towards this 113.48 zone. We got a hold up here, and was what I was saying, that if we drop below this, then yes, this will confirm a forthcoming lower low. We needed this drop first before aiming lower, and instead, yeah, we had a reversal. We tested the downside line again, and there we go. We had a nice break here this week, and we pushed higher, and then now the pair seems to be willing to move further north, and initially I'm going to be aiming for the highest point, the current highest point of January, near the 116.24 level. USDCHF, quick update on that one. Then, oh my God, this is just insane. So yeah, I mean, this is wonderful, guys. The only what I'm actually more happy about is that this idea of a possible range is working out so far. We did break this downside line. We did clear some of these levels that I was saying. That I was targeting the 0.9295 zone right here. We cleared that, and we continued to move higher. And to be honest, even if it retraces here, if it stays somewhere maybe around here, around this area, let me just put this on the chart. So if it stays, even if it retraces, if it stays somewhere around this 0.9275 zone, then yes, I'll continue aiming higher, and I'll aim for that upper side of the range here. If it falls and stays below this hurdle, maybe we could consider a move back down. But we'll get to that point if we do see such a move. Now, jumping into GBPUSD very quickly here, everything is kind of working out as well according to the plan. And what I was saying, that if we drop below this 1.3491 territory, we could go lower. We did that. We dropped. However, I mean, the drop was not really clear, I would say, because we did retrace after that a little bit, but as you can see, we stayed below all of the EMAs. This is something else that can help you, you know, sometimes when, let's say, a certain level doesn't work, you can always refer to, you know, a trend line or an EMA or, you know, an SMA, whatever you use, whatever you're comfortable with. But yeah, if let's say you think that you're right, and it seems to be like it's confirming your, you know, your idea, your scenario, but then suddenly, let's say, certain level doesn't work out. Like, always refer to another indicator, and if, you know, if those confirm still, then you still might have a chance. But if, you know, if those start not confirming as well, then yep, well, I mean, you might scrap the whole idea. But for now everything is working out nicely. We're getting this hold up near this 1.3375 level. If we drop again below this area, then yes, I will aim for lower levels, and then we'll just have to take it from there. Maybe I'll aim for the lowest point of December here. We'll just have to leave it there at that point and reevaluate everything at that point. But again, at the moment, if we do drop below this area, below this hurdle, below this 1.3375, the next potential target, to be honest, I mean, it's going to be for me somewhere around here. It's not far, I do understand that, but yeah, I want to be careful. We did already have that decline this week, so I'll just be very careful with this one. GBPJPY, I need to quickly rush through these guys because I'm running out of time. So I've mentioned this before. We're having this nice rebound from the 100-day EMA. However, we're getting a hold up below near this 21-day EMA. So if this 154.75 territory continues to somehow provide resistance, another decline could be possible. For me to consider maybe a move up here, a move higher. I would rather maybe stick to something like this here, somewhere above this 155.47, just a little bit, to be a little bit more on the safe side. A nice good push above it may lead to some higher levels. EURUSD, guys. So something that I want to mention to you as well, I'm keeping an eye on it because we are near this key 1.5872 level. This barrier is currently providing good resistance, and in order to go for some higher levels, I need that clear, strong move above this area again in order to aim for the current highest point of January near the 1.5946. But if that gets cleared, well, guess what? I mean, we could go for some further upside. If it starts dropping below all of the EMAs here, I'll consider a larger correction towards this upside line, and then we'll just take it from there and see if it wants to break it or not. And finally, EURUSD continues to slide. To be honest, I'm not going to spend too much time on this one because I talked a lot about it, and well, so far so good. Everything's working out. We've managed to clear the lowest point of November, great. That's what I was talking about yesterday, and we also managed to clear this this other level, this low of the 22nd of June 2020. So yeah, for now, to be honest, even if it retraces and if it stays, I would say it stays below this this area right here, this highlighted area right here, then, well, I mean, we will continue targeting the downside, guys. So keep that in mind. And yeah, for now, that's the game plan. For now, unfortunately, for the bulls here, it's not really looking good. So thank you very much for watching and listening, guys. I really appreciate your time. Sorry for rushing through the last instruments a little bit quickly, but I have to make way for my colleague here. But I hope you'll have a fantastic trading day. Stay safe. Have your stop losses in place, guys. Everything will be fine. Don't overtrade. It's Friday. Go into your weekend fresh and relaxed, and come back from from your weekend as well fresh and relaxed. And I'll see you on Monday. Oh, and by the way, the Monday session will be recorded one, unfortunately, because again, not gonna be doing the video from my usual spot. So the recording will be released around 7 o'clock GMT time as well. So hopefully, yeah. So unfortunately, guys, that's the situation right now that we have to kind of work with. But thank you very much, guys. I really appreciate you joining in this week, and have a nice trading day. Bye bye.